Hello, everyone, and welcome to Financial Accounting. Today, we continue reviewing business activities and we'll look into the nature of transactions from the accounting point of view. In today's exercise, we describe each transaction of Delta Consulting and explain the effects of these transactions on different accounts and on the financial statements, the beginning and ending balances of a few accounts, and the effect of a few transactions on the balance sheet have been provided. Delta Consulting is a real estate consulting firm. Summary financial data for May are presented in equation form as shown on the screen. Each line designated by a number indicates the effect of a transaction on the balance sheet. Each increase and decrease in stockholders' equity, except transaction number 4, affects net income. Before we move on to transactions, let's briefly review the accounting equation. Assets are equal to liabilities plus owners or stockholders' equity. If you look at the summary table, you can see that for each transaction, assets are equal to liabilities plus owners' equity. Cash and land are assets. Capital stock and retained earnings are owners' equity. This is what we're going to do today. Describe each transaction, determine the amounts of net decrease in cash and increase in retained earnings during the months. Determine the amount of the net income for the months. Determine how much of net income for the months was retained in the business. Determine the amounts of net cash flows from operating, investing, and financing activities. And finally, we will prepare a statement of cash flows. Let's describe each transaction. In the first transaction, cash and retained earnings have increased by $35,000. Since we know that each increase and decrease in stockholders' equity, except transaction number 4, affects net income, which is revenue less expenses, we conclude that an increase in retained earnings means that revenue was earned. A simultaneous increase in cash means that sale of consulting services was for cash of $35,000. In the second transaction, cash has decreased by $30,000 and land has increased by the same amount. This means that Delta has purchased land in exchange for cash amounting to $30,000. In the third transaction, both cash and retained earnings decreased by $25,000. Since we know that each increase and decrease in stockholders' equity, except transaction number 4, affects net income, we conclude that a decrease in retained earnings means expenses were incurred. A simultaneous decrease in cash implies that company has paid expenses amounting to $25,000. In the fourth case, both cash and retained earnings have been reduced by $2,000. Expenses and dividends decrease retained earnings. Since the transaction is not affected net income, this means that the decrease is due to the payment of cash dividends amounting to $2,000. We now calculate the amount of the net decrease in cash. To calculate this, we subtract the beginning balance of $50,000 from the ending balance in cash of $28,000. Therefore, the net decrease in cash is calculated as $22,000. Next, we calculate the amount of the net increase in retained earnings. To calculate this, we subtract the beginning balance of $120,000 from the ending balance of $128,000. Therefore, the net increase in retained earnings is calculated as $8,000. Now, let's calculate net income for the month. Net income is calculated by subtracting expenses of $25,000 from revenues of $35,000. This results in net income of $10,000. To calculate the amount of net income that is retained in the business, we will subtract the amount of dividends from net income. Dividends of $2,000 subtracted from net income of $10,000 indicates that the amount of net income retained in the business is $8,000. The next step is to calculate the amount of net cash flows from operating activities. Cash flows from operating activities refer to the cash inflows and outflows related directly to the revenues and expenses reported on the income statement. To calculate cash flows from operating activities, cash payments for operating activities are deducted from the cash receipts from operating activities. The cash receipts from operating activities are $35,000. The cash payments from operating activities equal $25,000. By subtracting $25,000 in operating cash payments from $35,000 in cash operating receipts, net cash flows generated from operating activities amount to $10,000. Cash flows from investing activities are cash flows resulting from purchases and disposal of investments and long-lived assets. In our example, the only investing activity is the purchase of land. Therefore, the amount of net cash flows used for investing activities is $30,000. Cash flows from financing activities include cash flows related to borrowing and stockholders' equity. Payment of dividends is the only financing activity that has occurred during the month. Therefore, cash flows used for financing activity amounts to $2,000. Taken together, $10,000 cash generated from operating activities, less the cash used for investing and financing activities of $30,000 and $2,000 respectively, results in a $22,000 net decrease in cash as we calculated earlier. Now let's prepare a simple statement of cash flows. There are three main sections on the statement: operating, investing, and financing activities. The bottom of the statement reconciles the change in cash with the beginning and ending cash balances. The ending cash balance on the statement of cash flows is equal to the cash balance on the balance sheet. I hope you found this video helpful. If you did, please make sure to subscribe, hit that like button, and ring the notification bell so you are notified when we release more videos like this. Thank you all so much for watching, and I hope to see you all again in the next video.